What a difference a day makes, right? Just one day. Yesterday, the markets are selling off because of trade wars and trade fears and ramping up tariffs on China. Trump comes out this morning and says, okay, well, we'll just kind of delay that maybe a week. We'll figure it out. Markets off to the races this morning. We actually started down about 14 points this morning on concerns about these accelerated trade. And again, about 8:30, 9 o'clock this morning, the administration backed off of that, said, we'll wait another week, see what China does. And of course, the markets took off after that. Now, having said that, when I say the markets took off, it wasn't the markets taking off today. It was FANG day. All day long today, it was FANGs. It was Facebook, Apple, Netflix, Amazon, and Google. That drove the entire market today. Outside of that, those two sectors, really not a whole lot was happening in the S&P 500. So, particularly when you start talking about 5 companies that have a combined market cap of the lower 400 combined. So it just goes to show you how much of an impact those FANG stocks now make up of the overall market. But the good news is, or the interesting news is that today Apple Computers, one of the FANG members, actually hit $1 trillion in market cap. So everybody was, and traders were looking to push that stock up. We were within $5 of it yesterday at the close, and all day long today when the markets open, traders were looking for trying to push Apple to hit that $1 trillion mark. They got it up there. We actually closed today with Apple above $1 trillion in market cap. First company in U.S. history to achieve that. Now, having said that, don't get too excited about it. This is going to become very commonplace in the future, and let me tell you why. Back in the day, and Richard and Daniel both remember this. Back in John will too, actually. John's is older than me, I think. But back in the day, back in the 90s and in the early 2000s even, the big thing was, say, ExxonMobil. Every time ExxonMobil would get to $70 a share, somebody call up and go, I'm long ExxonMobil. When do you think they're going to split their stock? Because it was a regular thing that companies would come out and split their shares. Everybody go buy a stock because they thought the company was going to split shares. And of course, that's dilutive. When they split shares, that increases the number of shares outstanding. And so earnings per share is diluted along with that dilution of the shares, or that increase in the number of shares. Well, today, because companies are so focused on beating that earnings per share number, nobody splits stocks anymore. Can anybody tell me the last time a company split a stock?
I can't remember.
Yeah. Again, it's been years. It's been at least
Why bother?
Yeah. And because, again, it's not conducive to the bottom line. If I split my shares, it increases the number of shares outstanding, which means that my earnings per share goes down, and everybody's looking at that bottom line number, particularly when revenue growth at the top line since 2009 has actually been fairly weak. Total revenue growth of the S&P 500 since 2009 has only increased by 43%. Bottom line earnings per share is up over 300%. So this has all been about accounting gimmicks and wage suppression and employment suppression to boost that bottom line. So nobody splits shares anymore. So now what they do, though, is they buy those shares back. Apple's had a huge reduction in the number of shares outstanding over the last several quarters, and at the same time as the price is moving up, this is increasing their market cap value very quickly. And more importantly, what's happening here is that this is not something just an anomaly to Apple. This is every country, every company in the universe basically doing exactly the same thing. So here's the point: Apple was the first, but they will not be the last. And in fact, in the next couple of years, I would suspect that $1 trillion companies are going to be kind of, every day. It won't be, a company with $1 trillion market cap will go, yeah, everybody else has done it too. Google, Amazon. Amazon will likely be the next one. And look for Google, not too far behind that. So that's just going to become much more commonplace. But nonetheless, very exciting today. Apple, $1 trillion in market cap. I'm not sure what that means. It's a nice big number. It's a huge number. Yeah. I mean, think about $1 trillion. You can't even spend that in decades. I mean, it's there's an old saying that says if you spend $1 million a day since Jesus Christ walked the earth, you still have money left over. So that just goes to show you how big of a number that $1 trillion of market cap actually. Now, you can't spend market cap, by the way. That's not cash in the bank. That's just valuation. So if Warren Buffett wants to buy Apple, he's going to have to pony up $1 trillion. I don't think he's even got that much money. He has a lot. I don't think he has that much. Outside of that, the markets, though, today, nice rebound off this sell-off this morning. We came back down, retested recent support here right at 2,800. Market turned right off of that with the reality that we're not going to raise tariffs anytime soon. But again, that's the good news. Holding that support line, that whole support, that Maginot Line that we talked about last week and last couple of weeks in the newsletter, that support level continues to hold, but we're unable to actually break out and set up new highs here either. So we're getting kind of in another one of these trading ranges. We're going to want to watch this tomorrow, see how we finish the week. In our weekend newsletter, we'll be updating our portfolio analysis and the 401k program manager that is in the newsletter. That allocation model will be adjusted up to 100% of target with instructions about what to do with it. It doesn't mean just because we raise the allocation, you immediately go buy everything. I'll have all the details about what to do with your 401k plan in this weekend's newsletter. So get by the website, realinvestmentadvice.com, and subscribe to the newsletter. I'll email you out that this weekend. Also, we're just finishing up the beta test for our new pro version of our website, so we'll be launching that. Lots of really cool technology there to help you manage your money better. We'll have that out in just the next week or so. So we're really excited about that. So lots of stuff coming your way on realinvestmentadvice.com. Articles are out today talking about GDP, the 4.1% GDP number. Tomorrow we've got several articles coming out from a weekend reading list, as well as valuation updates on the markets, and several other articles out tomorrow as well. So lots of stuff up on the website, realinvestmentadvice.com, to help you out there. And then, of course, more importantly, if you have any questions, comments, concerns, need help, feel free to send us an email, schedule an appointment, come by, meet with myself, Danny, Richard, John. We're all happy to help you. realinvestmentadvice.com.